Welcome back. Hope you're having a good morning. We have listed on all the top 10 stocks to track, but let's get into further detail and further fundamental analysis. We have Amnish Aggarwal, the head of research at Prabhudas Lilladher, who joins us on the show. Hi, Amnish. Thanks a lot for joining in. Well, I wanted to ask you your view on Hindalco. Novelis's numbers look very, very good. And brokerages on the whole, they've done two things. One is they've scaled up their aluminium estimates closer to around $2,500 per ton, which is around $150, $200 higher than what it was, say, a few months ago. And they're building in more stable earnings coming in from Novelis. What's your view on the stock? It's likely to open up well in the green.
Obviously, Hindalco in the metal pack has been very steady. Now, with the Novelis numbers being there and the capacity expansion in pipeline, plus the firm prices in the, you can say, global aluminium market, I think all the indications are positive for Hindalco. Now, if you look at the current trends, I think Hindalco in the entire metal packs will continue to be a big, you can say, outperformer or more steady stock. So I think Hindalco from here on also will continue to give you very steady returns.
Okay, that's on Hindalco. Amnish, hi, good morning and thanks for joining in. I wanted your thoughts on, some of these FMCG names. Of course, we'll discuss them in greater detail later. But good output from names like Godrej Consumer, Marico, a couple of other names recently have also done pretty well. Do you think the worst of the FMCG underperformance is now behind us? And what would your top picks be?
The main thing is that many of these companies are indicating some sort of, you can say, green shoots as far as your demand is concerned. And this is not something which has happened in a day. If you look at the trend of past couple of quarters, then many of these companies were indicating that there is some revival of demand and the things are looking up. Now, in some of these companies, we are witnessing that the volume growth actually is turning slightly positive, even in the rural India. And many of these companies are currently getting also tailwinds from the margins. Now, as far as your numbers are concerned, I think particularly on the demand side, things might have bottomed out. There's absolutely, I think, no doubt that with elections getting over and normal monsoons, there is likely to be a steady uptick in the demand in the coming quarters. But having said that, many of these companies, they are already operating at lifetime high margins because the commodity prices are very benign. You can take the case, say, for example, whether it is a Britannia or a Marico or maybe say any other player. So the scope to increase margins from here is very, very limited. And that is why if we put in totality, the profit growths are not likely to be, say, on an average, much beyond 10-12% kind of a bracket, unless and until see the benign raw material prices sustaining and a very sharp upsurge in demand from the current levels, which as of now seems to be gradually building upon.
Amnish, do you, by the way, have any coverage on Titagarh wagons?
No, we are not covering.
Okay, all right. We'll put out the call in greater detail. Morgan Stanley has initiated coverage, and that kind of talks about the opportunity in the railway sector, which I guess we'll sort of talk to CG Power. The management should also be with us in a bit from now. They're also in that segment. Amnish, but just a quick view on the market itself. Is something worrying the market, or is sort of elections on the market's mind? Because globally, things have actually, if anything, become better, more clearer. Data has softened, not too much though, and yields have come off, dollar is down, equities are up, but here there is hesitation. Just your quick thoughts, Amnish.
Yeah, Prashant, this was something which was expected only. And our view has been that ahead of elections, as we progress through the elections in the month of May, the markets will cool down a bit. They will react before that. And that is why the outcome of elections and the entire ecosystem around it becomes important. Because whatsoever might be the optimism, the elections are elections. And till the time the outcome is there, we will see the markets turning more and more cautious. In fact, if you look at FI numbers also from the past few days, there have been gradual selling. So the people are, you can say, taking some money off from the table. And that's why I'm of the view that in the month of May, we will see markets being range bound to weak. Whereas once the election clarity is over and if there is continuity of regime, we will see more money flowing in and the markets actually going up significantly over the next few months.
Now, Amnish, what about REC and PFC? Yesterday, they got smacked because of the RBI draft guidelines that came out. We'll have to wait for it to get approval and get implemented as well. But after, big rally, both these two stocks have pulled back on these fears. They did run up as well. But what's your view at these levels?
You see the undervaluation, or you can say the relative attractiveness of these stocks to some of the other financials, that is you can say no more there, because in price to book there was a time when all these stocks, they were trading at say 1 time, 0.5 times, so that is now not the case. So now going by, I would say the guidelines, there could be some incremental impact on their book, on their, you can say, the provisioning, NPAs and all. So I think after the big rally, the stocks are taking some knock. So however, I think it depends how you want to evaluate it. If you are looking at, say, a P multiple, then you might still say that these stocks are cheap. But in terms of price to book, now I think they are not cheap, and any move on the part of, you can say, the regulators to provide better outlook to their overall financial. So I think that will have some impact. And after such a big rally, I don't rule out some sort of a consolidation with some negative bias. And particularly given the fact that these are PSU stocks, and as we discussed that the outlook in run up to 4th June seems to be slightly mixed as far as markets are concerned. So any negative news flow in that phase, I think that can result in the bigger than expected impact on the prices of some of these PSU stocks.
Okay. Amnish, thanks a lot for joining in. Let's